Okay, good afternoon, everyone. Give me 1 second here while I get this stuff going. Okay, cool. All right, so this is going to be a short tutorial on the X factor and the bias box, right? This is just some new data that I've been meaning to put into video. Actually, these are too red. I've been meaning to put this into video and haven't had a chance to do it. We had a 14-minute audio. Actually, I would still encourage people to check out the audio in case there's something that I missed with this, but I think this should cover it. Hopefully I can wrap it up with some visual illustrations of what I'm talking about, right? This is the content you'll want to look at, kind of go through all of this when you do review the audio, right? So keep that in mind. Okay, so first off, I'm just going to kind of touch on our, what I call the core 6 now. I used to call it the core 4, now I call it the core 6. I'm going to go ahead and probably stand to delete some of these things that are probably not relevant, and just kind of give people an idea. This is step 1 in our alt scanner hunting. What we do is we use the bias box data in these different KPIs to assess the larger scale environment, right? Like, is this a decent time to short alts, long alts? Where are we at with trends? You know, you name it. So I'm going to kind of start with some information that, you know, will give you a little perspective on how we use the bias boxes and what it is, you know, that they even do. So you'll have a little bit of perspective on that. And then as you can see, I use these big X emojis. I type out, you know, just kind of what the situation is relative to that KPI, right? In this case, like Bitcoin dominance, total 3, you know, total market cap, Bitcoin itself, all of these things, right? Others, you see we got different things in there. And so what I would kind of like draw your attention to is usually it's this. This is the micro CCM, right? Which means that this is relative to, let's say, the 6 hour all the way to the 2 day. The most sensitive time frame in here is the 5 minute. I'm going to show you a flex chart that has an example of a scalping CCM, and it has an example of a midterm CCM where the data is a bit larger. So we'll kind of have a look at one of those as well. I think I have Sonic pulled up, and then I have Sol pulled up. Again, my intent is for this video not to run too long, but just to give you some perspective on what I'm talking about when I talk about X factor and when I talk about bias box. So X factor is, simply put, is everything that shows up in this column here. It is one of the more sensitive metrics that we have, similar to breakout bars, but I think in a lot of cases, especially when we see them setting up on, you know, larger time frames, I've noticed that, you know, they probably have a little bit more longevity than breakout bars. So when you have both occurring at the same time, both occurring, you know, with the same direction, the same pressure, whether it's bearish or bullish, I think that can be a good setup, right? We have a lot of videos on the rest of the CCM, so I'm not going to go through everything about the conditions conducive monitor. Again, mostly I want to touch on X factor, what it is, how it helps us, and then I want to touch a little bit on bias, right? Bias wraps, bias boxes. So the bias boxes are here, right? So here is a bullish bias box. Here is a bearish bias box, right? As you can see, we're in a bearish bias box. Again, this is per time frame, so this is relative to the, in this case, the 1 day time frame. And if you want to, and this is where the value of the CCM kind of shines, if you want to see what the bias looks like across many time frames all at the same time, you can take a look at the CCM, right? So not sure if you can see it. I think you can. The clarity, I think, comes in pretty well, and I think you can see it here that right now, just for this particular metric, which is total 3, right, the altcoin market cap, you can see that through the 24 minute has a slightly reddish tint, right? A slightly reddish tint behind it. You can see that the 45-minute and the 2-hour have no tint, right? There's no bias really in there, which means it could be ranging, it could be choppy, it could be a myriad of things, but usually those two. And then you can see that it's kind of sandwiched by bias in the 4-hour, the 1 day, and so forth. We have a lot of other metrics like linear regression and many others, that you can kind of use. All these dots obviously mean different things, but I don't want this to turn into content about anything other than X and bias. So what I want people to kind of understand is these are the bias boxes as they show up on real charts, right? Bearish bias on the 1-day time frame for this asset, right, which is others. In this case, the total market, right, the entire crypto market looks like at present on the micro CCM, it's bearish, in a bearish bias from the 12-minute all the way to the 2-day. We can see we also have some X factor kind of forming or formed in the 4-hour, the 6-hour, and the 1-day, right? So that means, if anything, we've got a significant degree of confluence kind of pushing price action down or measuring pressure as being predominantly bearish, right? So you've got bearish bias, which means you probably shouldn't be looking for longs unless you really know what you're doing, know that you're going against the grain, especially when you have bias in all of these different time frames, right? Literally from the 12-minute all the way to the 2-day. So it's kind of like you have to ask yourself, what am I doing? Am I really thinking that I'm going to nail the long on, let's say, the crypto market when not even the 5-minute is in a bullish bias? And then how realistic is that? Or is that something that's on the don't do dumb things list for a reason, right? Whether you're successful or not, it doesn't make it smart, right, to do it if it's going against every single trend, most of the dominant pressures, energies, etc. So right now, choppy at best, most likely bearish for, again, total market cap. That's just what crypto is doing today. And then if you look at the chart, you look behind it, you can see that bearish bias on the 1-day started at a pretty, solid moment in time, right? Somewhere, let's just say around the 14th of February. At least that's when this last one started, right? Somewhere in this range. And then it doesn't always get it right. I suggest people go back and, look at history, but, not bad, right? If you're just looking for bias altogether. All of the different dots in here have everything to do with everything. But I want people to understand, what it is they're looking for when they look for the bias box. So this is where it shows up on the page. And then this, for this time frame, is the row that you would look for and say, is there that reddish pinkish hue behind it? And then I would tell you the exact same thing, but the opposite for a bullish bias box, right? So you've got this one. It started a while back. Looks like it started approximately late January. I'm going to say late January. The last one, where the 1-day went pretty bullish bias for Bitcoin dominance, right? So we were kind of like playing with an alt season, I guess, back in December, approximately November, December. And so now you can see that Bitcoin dominance has us in a bullish bias in a lot of places, at least on the micro, from the 4-hour to the 2-day, all in this green bullish bias, right? So it shows up as what we call a bias wrap here. And then all this is in this little square is just kind of articulating what's going on real charts, right? So this is just the 1-day bias box that's showing up bullish. So the chart that I'm looking at is just representative of this one row. So what this CCM allows us to do is look at all of these different time frames at the same time. And this is what we call the micro CCM. We have one with larger time frames that go into the midterm CCM, and then we have a larger one we call the macro CCM. And they're all custom time frame groupings, right? So for instance, the midterm starts with the 1-day, 2-day, and 3-day. This we call the micro. It's as sensitive as the 5-minute, the 12-minute, the 24-minute for its starting point. Its largest time frame is where the midterm starts, right? So you can imagine that the macro starts even larger, and it goes into the multi-week, and it goes into the multi-month, right? It has like the 3-month on there. So you can know the energies and the trends behind the 3-month candles for different assets, which comes in handy on assets that have been around for a while, like the S&P 500, right? Apple, things like that. There's plenty of data, so you can kind of see what's going on a macro level. So those are pretty cool, pretty powerful. But that is what the bias wraps do. And this is how they show up on the chart. And we use them in conjunction with a lot of the other things we have, whether it be moving averages, whether it be these ribbons that we use, whether it be these volatility clouds that we use, whether it be linear regression that we use, whether it be any of the other dots that show up in our dot matrix that we refer to as the conditions conducive monitor. The point of me having these was to give people a better understanding of when they might be about to do a dumb thing, right? Our mission here is based on Keith Cunningham's book, The Road Less Stupid, which is avoid doing dumb things and you'll do a lot better in life. He says the secret to getting rich is not to do more smart things, it's just simply to do less dumb things. And I've kind of taken that and ran with it because I thought about all the dumb things I've done, and he's right. If I could reverse time on my top 5, I would have significantly more capital. So if you're doing well in life, then you reverse, those top 5 monetary mistakes that you've made, you can imagine how much better you'd be doing. So if you can avoid that phenomenon happening over the next 10 years, every year you're focused on not doing anything incredibly stupid, then it's a great way to have a better chance at creating wealth, mitigating risk, and not suffering, the pitfalls that can occur, especially in the trading space. So we use it religiously day in, day out. We have a list for it, super helpful. Again, I'm not going to go into what the colors on the bar mean or any of the other dots. I mostly just want to talk about the bias wraps. So pretty awesome that they kind of give us a glimpse of what we should probably be looking at, what we shouldn't be looking at when it comes to all of this, right? If we're going against the bias, we have to assume we could be making a mistake. I use these 6 metrics and the CCMs attached to them just to make sure I have an understanding of what I should be looking for and what I shouldn't be doing. So if I'm thinking about longing something and I'm going against every single thing that I know I shouldn't be going against, it allows me to stop in my tracks and review, that idea that I was thinking about doing. So that's kind of how it shows up when we assess the macro environment. As you can see, when Bitcoin over here is bearish, then we don't want to long, right? So if it's bullish, we long alts. It's not bullish, so we get an X. Over here, we look at total 3, alt cap itself. When it is bullish, we consider longing alts. It is not bullish, right? These bottom time frames, the bottom half of this is pretty bearish. It's all wrapped in bearish bias, all time frames. So it's not a great environment to long alts, right? And some people will try to catch a falling knife, and occasionally it can work. But this just lets you know how against the trend of a decision you are looking to make, right? Next one, I look for others. Is it bullish? If it's bullish, I want to consider longing alts, right? The 12-minute through the 2-day, all bearish. We've got some X factor confluence in the 4-hour, the 6-hour, and the 1-day. It is not a great place to long alts collectively, right? There may be some alts that are set up differently from others. We have flex charts for that. We have alt scanners for that. But as a whole, I have to know that even if I find an alt that is worthy of longing for some reason, that it's going against what's happening in the macro environment with everything from Bitcoin to all of the rest of these metrics, right? One by one. Next one I look at would be Bitcoin dominance. Same thing. If it is bearish, I might long alts, but it's far from bearish. It's bullish bias in the 4-hour all the way through the 2-day. I can see how it's performing in this channel, in this box, in above this volatility cloud. So for all these reasons, it makes no sense. It even has the movement monitor box, which indicates that the trend scanner is actually pretty bullish on the 1-day, right? So we kind of see that right here. See, I don't know if you can see that, but right here, right? So the trend scanner is responsible for this box forming. So it is the opposite of bearish. So we don't want to do it. And so that's how we kind of go through and process these to get an idea if we should be looking for longs or shorts in the crypto space, right? So next would be looking at individual positions, right? So I'm going to start with just the 4-hour time frames, and I mostly want to give people an idea of what's going on, right? So the 3 strands are ribbons, which indicate the 200 period moving average for whatever time frame we're on. In this case, the 4-hour, right? So you can see this moving average is way up here. So SOL is quite a ways below it, right? Some people may say, oh, that's oversold, I need to jump in. But is it really, right? Like, the market can stay irrational much longer than you can stay solvent, so it might be best not to catch falling knives. And so again, if you're in a 4-hour bearish bias box, you really don't have a whole lot of cause to go in and long something. Now, we do have pressure lines that will populate, and we can use those to our advantage too. You can see kind of what they look like over here. And whenever you're close to one, you have opportunity to long as you're approaching one from the upside. You have the opportunity to short as you're approaching one from the downside. All related to, you know, what's happening in the bigger picture with all of these different dots, right? And there's again a whole different course on these dots and the CCMs that goes through a bit of everything. But I wanted to give people an understanding of what these look like. So these are scalping time frames. So the reason you see some green in the top rows is because these are sensitive up to the 1 minute time frame. I would highly suggest not trading these. Sometimes these are good opportunities to let you know when to take profit, or if you really want to try to scalp and you want to keep your absolute value low. There's different opportunities in here, but having the wraps really gives you a much bigger picture idea of where you're at, right? So from the 12-minute larger into the 4-hour, there's not really any reason to long just yet, unless you really think that the 1 minute having a green bias box is your chance, right? And I would recommend against that. We do have different protocols for where we start to consider, and that's a different class. But mostly I wanted to let people know bias boxes let you know the trend you should be looking at, right? A lot of times when you see this type of configuration with green on top, it just lets you know you're in a downtrend and you might be in that moment of volatility that makes for the perfect short where you want to enter your short. And then we always have our little stop loss here. We look at our risk reward ratio. We do things intelligently so that even if we're wrong because of how volatile the crypto market is, we still don't lose much, right? We concentrate on having a 7-to-1 risk reward or better, which is pretty high standard. But I kind of went off Paul Tudor Jones' standard of 5-to-1. I said we need to amp that up, assuming we're not as good as Paul Tudor Jones, and we're in crypto, right, in a lot of cases. So I think 7-to-1 or better is good. But as you start getting higher in your asymmetry, right, as you start saying, I found a 15-to-1 or I found a 20-to-1, you have to realize that the difficulty rating of nailing that becomes very challenging, because you generally achieve it by either A, having a very unrealistic take profit, so you have to check that, or B, having a really tight stop loss and you're likely to get stopped out, right? So you have to really, really master the art of intelligent entry, which we have a lot of work on, and we have a protocol for in Platinum DIO as well. So here's a cool example of a 4-hour bias box forming, right? We left it, and it looks like one is forming again, right? So you can kind of catch them forming. And I would highly suggest going back and looking at the historical success or failure or false alarms of those bias boxes within any given asset, right? And you can kind of look at it and say, well, if it nails it often, then, there's a good chance that this one could be successful. I need to be cautious. If it nails it 50-50, it gives you a different perspective. Maybe you need to look at a time frame that's larger, that on average is successful more often, right? I can tell you that like a bias box on a 12-minute may be very flippant, right? It's like a 50-50 chance of success. Or maybe if you look at something similar, like Bitcoin on a 1 day, or a 3-day. When those bias boxes open, they tend to have more longevity, right? So time frame has a lot to do with it. They can be excellent signals for when to get out of something, help you understand when you have volatility to maybe get into something, just like the little image that I just drew, right? Just kind of showed you that, right, like right over here, we may be in this moment of all in all bearish pressure, and because we see green in these top rows, it just might be one of those opportunities where we at some point find that intelligent entry. You need the opposing volatility to find the intelligent entry. So opposing volatility is not a bad thing until it starts to go against your position, and then you have to question, did I really enter intelligently or did I not? So I think that's enough about the bias boxes. The second one is X factor. This again just helps you avoid doing dumb things. So the bias box and the X factor, both at their core, are to help not do dumb things, to help you understand where there is additional pressure maybe going against you or maybe supporting you, and where there is bias maybe going against you or directly supporting you. So the easiest way I can put it is you probably want to align with X factor, you know, and some of these other key KPIs, as well as bias wraps, right, on these larger time frames, and larger than just the 4 hour too, right? We're going to look at one real quick before we wrap up, but you want the bottom halves of relevant CCMs to be shaded, right, to have these bias wrappings, that the background of the CCM itself needs to be shaded in your color ideally. If not, then just understand what you're attempting to do is nail a reversal. So if you find that the first couple very sensitive rows are going into this potentially new direction, you have to ask yourself, based on what I see in this chart, do I really think that I'm looking at time frames that are relevant enough that I'm going to catch the bottom and then ride it all the way to the moon, right? And I can tell you, when you're just looking at the 1 minute or the 3 minute, you know, that's not going to be a move you want to make, right? There's certain time frames that generally are more responsible more often for trend reversals, and they're nowhere near the 1 minute. So get with us if you want more data on that when it comes to using the CCM more effectively, right? If any of these were lit up all the same color, from the 1 minute to the 4 hour, that would indicate extreme pressure in all time frames from the 1 minute to the 4 hour. So again, you mostly want to align with X factor, especially larger time frames. You want to align with all the other dots that we mentioned in all the other trainings, and you want to now make sure that you know where you stand, whether it's going with or against the bias wraps, right? In this case, a bearish bias wrap. So it's kind of interesting, right? Because we do have a 400 hour that has a bullish slope to it, right? So you have to kind of run through all these different things, go to your flex charts, and kind of see what makes sense. So that's a good example of that. This one didn't populate all the charts, but it's the same thing. This just has also has scalping, which is not again not what I recommend. I must have just had these on the alt scanners, but I generally have the micro on, and then I usually look at the 1 day and the micro. So the time frame on here is correct. I would just be looking more so at the micro, which starts at the 5 minute and goes all the way to the it's this one here, right? Starts at the 5 minute, goes all the way to the 2 day. Big difference between these that start at the 1 minute, only go to the 4 hour. These can flip very quickly, right? They're meant to be sensitive, meant to give you really, really real-time data. And again, maybe the time frames here with the most longevity are the 3 hour and the 4 hour. So if these have X factor confluence, it's just a sign that says, hey, if I was thinking about longing storage because I saw some recent bullish activity, just those two dots alone tell me that's a bad idea, right? When I see this conflicting data here, same thing. Here, maybe it's a little bit smarter, because if I'm looking for a scalp, at least I don't see any signs of bearishness. But I look at this and I go, is this really worth it? And it's entering a 1 day bearish bias box. I can see it here. I don't have to look here because I'm on the 1-day chart and I see it forming, right? So these are some things to consider, just ways that you can use it to your advantage. Okay, so next, let's take a look at the flex chart. How can I use this on a flex chart? Here we are on the flex chart. You look at what I call the launch time frames or your entry time frames. These can vary, but right now I have the 5-minute, the 12-minute, the 1 hour. If these are all in green bullish bias boxes and I have expansion dots on them and I have linear regression channels sloping green on all of them, I have this scalping monitor let's say it's lit up green with green bullish bias all the way up to the 1 hour or the 2 hour and just full-blown green dots. Like, these are things that would make me think this could be a true reversal. And then again, we kind of have our method of spotting a true trend reversal, what to look for, what not to look for. But top things that the bias boxes are for and the X factor is for is to either establish your case for a confluence for the direction of your trade, so you can say, yes, this looks like it's doable, this looks like a smart thing to do, or to shoot down your idea, which is never a bad thing because it helps save you money, right? So as I look at this one here, I don't see a trade, right? Like, I see that there's potential, but I don't yet see a trade. So all I have to do is wait. If I want to, I can go over here. I can look at something different, right? I can look at Bitcoin, just for instance. Let's just say I want to trade Bitcoin. It's got more liquidity. There's always something going on with Bitcoin. It leads the market anyway, which makes it not a bad thing to trade in a tricky environment if you see a setup. And so I can go here, I can look to see if Bitcoin is worth trading too. It does take those those CCMs a moment to populate, but just looking at the midterm, I can see like I'm going against 1 day, 3 day, 4 day X factor right now. I can see I'm going against a cyan bar here, right? Which means I have about 75% bearish confluence. I can see we're in danger of retesting and falling below the 200 day moving average for the 1 day time frame. So everything says it's not a great time to long. It's kind of a stupid time to long, or if I was going to long, I need to have expectations that it would be very, very short-lived, and I want to make my money, get in, get out, protect it, all of those things, right? I want to be very, very quick with it and not have expectations that this is my long that's going to last till, you know, late tonight or tomorrow. You know, it's not one of those times that I would have that kind of expectation, right? My perspective windows are the ones here along the bottom, and right here you can see the 1 hour is in its red bias box, right? You can see the bias wrap. Oh no, you can't. I don't have the 1 hour there, but you can see. So it's got the trend scanner box, which is attached to the movement monitor, which is the one with the bold outline. And then it also has the bias box. So again, not a great opportunity to long. You question it, right? It could turn into one because we're in this bullish sloping channel on the 200 hour, but most of these linear regression channels across the board on all these different time frames, which is why I bring up the flex chart, right? To see the 200 hour, the 400 hour, the 100 day. When all of those linear regression channels are bearish, I have to assume that this one became bullish in what was overall a moment of bullish volatility, right? And so it created an upward slope over the past 200 hours, just barely. But everything else, including the 200 day, looks very bearish. So we kind of have to say, okay, still not a smart time to long because the overwhelming confluence says that it's bearish. So we have linear regression, we have X factor telling us no, this is dumb. Even on small time frames, we have X factor telling us no, a long would be, you know, not wise on the 4 hour, the 6 hour, and the 1 day. And then we have it over here too on even larger time frames, the 3 day and the 4 day. Now we could look and kind of have a glimmer of hope saying, you know what, it's kind of cool that we have a bullish bias on the 6 day all the way through the 1 month. I think that is kind of like that glimmer of hope and positivity and even expectation that we haven't left the bull market, right? Until we start to see a flip on the 6 day and the 1 week, I think we're probably still in a bull market, to be honest, even if we have a significant correction. And then we have other ways of kind of assessing that, but that's a big part of it, right? So look at all this, right? If I look at the linear regression for these time frames, they're bullish and breaking bullish. So this volatility from 109,000 to 80,000 has not even changed that. So it helps us have this larger scale perspective. That's, again, another useful tool for what the bullish bias wraps can give you on this one, right? Which is the macro, or I'm sorry, the midterm CCM. The macro is even larger, right? But this one is cool because it goes up to the 1 month and it starts at the 1 day being the most sensitive. So again, this lets you know I probably don't want to long. I'd be going against all of that, which is dangerous. And I probably don't want too long. I'm going against essentially a deep blue weekly candle, right? And if you've been with DIIO long enough, you know that going against a deep blue on a weekly can be dangerous, especially for leverage traders. You see expansion monitors, showing up on a few time frames, kind of pinging. You see a fairly solid trend scanner on the 1 day. So there's a lot of things that come to light because of this. But one of the biggest ones that I want to share with you that come from these two monitors themselves, right? The bias boxes / wraps and the X factor is they help you avoid doing dumb things, and they help you establish a case for confluence going in the direction of a trade that you're considering. So here, the intelligent trade would be the short. And then again, we go and we look at the art of the intelligent entry, and we look at the psychology of the intelligent entry, and then that helps us find the exact moment to enter, as well as the leverage that we should use that would be intelligent, as well as the absolute value that would make the most sense for us. And it's always based on the individual, right? It's never based on one size fits all. Right? It has to meet your money velocity needs, has to meet your goals, it has to meet your risk tolerance. So everybody can play the game their own way. This just kind of helps you avoid doing dumb things. When you see this many bearish bias boxes open in larger time frames, it's just not a great environment yet. Could turn into one at some point, but not yet, by no means, for a trader looking to do a scalp or a swing trade long. Right? It's just not a great opportunity. Even if you ask yourself that question, is this trade worth it? The expected longevity of an upward move is going to be pretty minimal, right? Like right now in real time. So we would not do it. At the same time, it can help you establish your case for finding an intelligent entry on a short, right? Because you have all bearish bias boxes open in most relevant time frames. You have some nice entries, probably coming or present based on linear regression. You've got the 1 week, still open, heavy bearish confluent based on breakout bars. Right there you can see on the bottom right. So you can essentially maximize your decision making, right? Whether it's avoiding loss or whether it's finding opportunity to create gain. And so I hope this is helpful. X Factor is, I would say, just about as sensitive as breakout bars, but it requires just a little more to come together to actually have them show up. And so a lot of times I would say I expect to have a little more longevity out of X Factor showing up in the larger time frames than the breakout bars, right? I look at the breakout bars as human emotion too. A little more difficult to look at it that way on the 1 week, but on the 1 hour, the 5 minute, the 4 hour, a lot of times you can kind of look at it and you could say if it's orange, then human emotion for whoever's trading that on that time frame is bullish and greedy or whatever you want to call it. They're not fearful, they're jumping in. If it's deep blue on those smaller time frames, then you can look at it like human emotion for that asset for that time frame probably has a lot of fear and they're like jumping out of it, escaping it, that sort of thing. The opposite, right? The opposite of greed. So breakout bars are a little more sensitive, a little more emotional, and it takes a little more for the X Factor to pop up. And when it does pop up, I think it has a little bit more longevity. So again, kind of a cool opportunity to look for entry on a short, especially because it coincides with some of the stuff over here, especially because we are still in a 1 day bearish bias. And then of course you can look at the boxes, you can look to see where we are with regard to, you know, these ribbons. I think that's kind of cool. You can look to see where we are with regard to volatility, clouds, movement monitors, and use all of the different tools that we have to offer to make sure that you make a good decision and that you don't just enter anything. And as Warren Buffett always says, you wait for the right pitch to come into your sweet spot, and you watch pitch after pitch after pitch go through, and only when you have the right pitch do you take the hit. And that's when you unleash your energy and do something that creates, you know, wealth and avoids loss and doesn't take unnecessary risk at a terrible time. So these particular new assets that we've added are to avoid doing dumb things and to help identify even more confluence for doing the right thing, making sure you're not going against the grain, making sure you have perspective for what's going on any different time frame that you want. And that's why we allow three, like I think our favorite is to have 3 different groupings in the flex charts, right? We want to have the scalping, we want to have the micro, and we want to have ideally the midterm, sometimes the macro if you're swing trading stocks. And then we want to find, you know, the right dot setup, and we want to find the right X factor, the right expansion monitor, the right bias. All of these things come together to allow us to do really, really well when it comes to trading. So thank you so much for taking the time to watch this. I hope this clears up what they are, what they do, how to use them. Again, if avoiding doing dumb things is what creates wealth for an individual, then X factor and bias wraps are some of, you know, our best friends. And if identifying added layers of confluence is what helps us identify the best opportunities to take that chance on, then X factor and bias wraps are our best friends, right? In addition to the myriad of additional KPIs that we monitor. So now when a person has a chart like this up in its entirety, I can tell you this is probably well over 1,000 different KPIs being measured all at the same time, with the CCMs being most of them. And that's not even counting the different metrics that I'm monitoring on the chart itself, right? But the CCM is probably about 1,000 now that we've added the X factor, now that we've added the bias wraps. It's accounting for so much in one little square in 3 different places. So 3 little squares, different time frames, you can see everything. And that's the whole point of what we do. All right, thanks so much for watching. I hope you find this video useful for X factor and bias box and bias wraps. All right, have a great day.